Shashank Khare, Senior VP Kotak Mahindra AMC, joins in to chat about his take on the market. Shashank, hi, morning. What, according to you, seems to be holding the market back at a time when USQs are looking okay, we're completely unaffected and in our own trajectory?
No, I think the markets have been consolidating during the earnings season, month of October. I think the same continued, post Diwali as well. I think clearly the markets are consolidating, hoping that whatever reforms were announced in September are followed up by some sort of action in the Parliament. While the expectations are extremely low right now that any business can get conducted, and this winter session is going to be stormy, as everyone knows about it. So I think it's going to be that Parliament session which is going to be far more important for the markets to take a direction in the month of December. Any sort of inkling of some business getting transacted, bills getting approved in the month of December in this winter session, and I think the early the start of the winter session itself will be sort of a pointer to that. I think that is where the market will take a sort of a cue from that event, and then thereafter the direction will be really set. From a domestic investor point of view and a foreign investor point of view, clearly there has been a disconnect in the last 3 months. While the domestic investors have been selling quite aggressively, you've actually seen foreign investors slowly and steadily increasing their exposure to Indian equities. While the Indian investor has completely lost faith in Indian equities, and he's been actually reducing equity exposure. So I think the allocation towards equity is getting leaner amongst domestic investor. Pessimism is extremely high. People are searching for negative sort of reasons to prune down equity further. I'm not sure whether people are really looking at anything positive on the horizon. If you look at it's very clear that the interest rates have topped out. It's a question of rate of change, rate of decline of interest rates going forward. I think that's where the question lies. If we have a rate cut, say in the month of January, I think it's going to be sort of a positive for the markets, because that will set the tone of further reductions, in a gradual manner throughout CY13. And I think that could be clearly positive for Indian equities. As you know, economy bottoms out, accelerates after a given point, but markets tend to discount it ahead of time. I think the markets may tend to do that in the next couple of quarters, try to discount that the economic growth has bottomed out and will slowly and steadily move up from here. I think that sort of a phenomenon will pan out, and markets may tend to discount that going forward.
So Shashank, what is your assessment? Should investors buy into this weakness, or they should wait for some more fall? And as the year unwinds, we could be staring at more weakness, and this market could give better entry points?
No, I think it's going to be very difficult to time such a market, but given the fact that the level of pessimism is so high, it makes sense to buy into this market while the markets are consolidating. Look at what the markets have done. In fact, it's been sideways for the last 45 days. So clearly telling you that while the markets moved up substantially in the month of September, you've had already a time-based sort of correction, going on for the last 45 days. So I'm not sure whether people should really expect too much of a price, decrease, wait for markets to correct deeply. I think it's better to cherry pick what you like, be it financial services, be it any other sector wherein value is surfacing out. I think I think the investors should continue to invest right now rather than wait for any sort of action, from the even the Parliament as well. So while the hopes are low, I think this event, the Parliament session looks like what September was, because while there were a lot of rumors and buzz around reforms being enacted by the government, when the event happened, people were completely caught by a positive surprise. My sense is this Parliament session could also be one such event which could be similar to what September was. So I think it's best to buy into the market when people are right now just not keen on buying, and I think the impact cost is quite low if you accumulate now.
Shashank, what is your house view on NBFCs? Because if your view is that interest rates will come down, then NBFC as a business, NBFC as a group automatically will make money.
No, I think NBFCs, if you look at in the last, 2 quarters, the stocks have done quite well. Unlike the earlier times when interest rates used to be high, the NBFCs, used to have serious issues on NIMs, and clearly the business growth used to slow down. This time around, we haven't really seen as much of that. We have actually seen a number of NBFCs growing in this period, while the banks slowed down on the credit side. NBFCs did not have issues like NPAs because of exposure to infrastructure, or projects for that matter. So clearly, I think from that standpoint, NBFCs have continued to show better performance than the banks, and on the back of that, you've seen NBFCs getting re-rated over this period, while the banks have been, struggling with asset quality related issues. So having said that, I think a lot of the NBFCs have been priced out in terms of valuations, because quarter after quarter we've had discounting of good numbers, and I think that's got built into a number of cases quite well. So I'm not sure whether there is much room further to go, and price in a decline in interest rates and improvement in NIMs, because we haven't really seen a decline in NIMs as much. So I think the NBFCs have been priced in quite well. I think it's a question of now fundraising by some of them, and funds are getting raised at pretty high premiums right now to book. So I'm not very sure whether NBFCs can continue this re-rating as we've gone along. It could be very stock specific from here rather than the entire NBFC pack and generalize and buy. So it could be possibly time to look at some contrarian bets in certain banks, if asset quality related issues wane out or wane down in the next 2 to 3 quarters.
Shashank, there's news out this morning that the NPPA has imposed a blanket ceiling on insulin prices. What, to your mind, could be the damaging effect on names like a Biocon as well as Wockhardt?
No, I think it's still early days. I think the industry will also lobby and try and see whether these sort of anomalies can be corrected. It's not such a big impact because the Indian companies are not as large in insulin. So I think I heard Kiran Shaw right now on your channel itself, and I think her point, she's quite vehement about her point of view, and they will definitely lobby to the government in terms of what their point of view is and why they would want parity in insulin prices. So we'll have to see how this decision finally pans out. We've actually seen that these type of implementation takes time, and finally an amicable solution comes in which is acceptable to all the stakeholders in the industry. So I think still early days. I'm not sure whether it will create too much impact on these talks.
What has done the trick for Mahindra and Mahindra? Because if I map the dynamics of the entire four-wheeler industry, there is intense competition. There are not 7 or 8 players, there are 13 players. The areas in which M&M is operating, the SUV segment, that also is intensely competitive. So why is M&M outperforming?
No, I think the outperformance of certain auto stocks are clearly linked to certain product launches and how those product launches have fared in the market. I think for M&M it has been XUV 500 which has done the trick. That's been that's actually created a segment where people are now trying to follow and get into that price segment. So clearly I think that's the reason why you've actually seen the SUV, the utility vehicle segment doing extremely well, while the tractors, if you were to look at, has actually been quite disappointing, and that's while the tractors did badly, they got a leash of life from the UV segment. So had the UV segment not come alive for M&M, I think the stock would have not really seen such sort of performance in the last 1 year. So it's very clear that if you have certain products, create a certain segment, there is demand for a certain product being priced at an appropriate price. So I think M&M has got that strategy right, and that's the reason why you're seeing the stock performing quite well. And I think that's the reason why the stock has done quite well, because the tractors disappointment has got absorbed really well in the entire scheme of things. So I think it's the UV segment and the leadership, the fact that they have been leaders and they have actually created a segment, in that particular, vehicle segment. I think that itself has given them a premium of for valuations.